Hi there, this is Untitled. Today we're talking about a publicly traded space tourism company that has been on the radars of most growth investors. Furthermore, ARK investor CEO Katie Wood decided to purchase shares in the company. Even though she has sold all her holdings in the company, this still means that she still believes that the stock could go higher. The company that I'm talking about is Virgin Galactic. In today's video, we're talking about how Virgin Galactic plans to grow and bring space tourism to the world. Before we continue, please smash the like button, and if you'd like to see more such videos, please subscribe to this channel. Firstly, we're talking about the business model of the company. Virgin Galactic is an American spaceflight company within the Virgin Group. It is developing commercial spacecraft and aims to provide suborbital spaceflight to space tourists. Virgin Galactic's suborbital spacecraft is air-launched from beneath a carrier airplane known as White Knight 2. Virgin Galactic founder Richard Branson has originally hoped to see a maiden flight by the end of 2009, but the date was delayed for several years, most seriously by the October 2014 in-flight crash of VSS Enterprise. As of 2020, the first passenger flight was planned for no earlier than May 2021. The company did the early work on the satellite launch development of Launcher 1 before this was hived off to a separate company, Virgin Orbit, in 2017. The company also has aspirations for suborbital transport, and in 2017, Branson has said that Virgin Galactic was, quote, in the best position in the world, end quote, to provide rocket power point-to-point 3000 miles per hour air travel. Secondly, we're talking about the recent spaceflight test from Virgin Galactic. Virgin Galactic stock jumped after the space tourism company announced its next spaceflight test will be taking place in May. Following the completion of a maintenance review of its carrier aircraft, the stock has been getting hit on concerns Virgin Galactic will delay the test in May. A delay will have compound issues that have put the stock under pressure in recent months, including increased competition from Jeff Bezos' Blue Origin. Following a detailed inspection and thorough analysis of our partnership, we have cleared our spaceflight system for our upcoming flight, Virgin Galactic CEO Michael Kaiser said in a statement. Virgin Galactic leadership, when the company reported first quarter results in May, revealed that the target date for next spaceflight test was under evaluation due to possible maintenance issue with VMS Eve, the aircraft that carried the spacecraft before launch. The company is working to complete the development of its Spaceship 2 system, with 4 test flights remaining before Virgin Galactic begins commercial service in 2022. Virgin Galactic attempted the first of those 4 tests in December, but the mission was cut short by the engine problem. The company scheduled a repeat of the flight attempt for February, but then delayed to May to give more time to address an electromagnetic interference issue with the spacecraft flight computer. This upcoming spaceflight test will fly with just 2 pilots and will carry microgravity research payloads under NASA's Flight Opportunity Program. In addition, to resolving the issue that aboard the December attempt, Virgin Galactic said this flight test will further evaluate its customer cabin and test a live stream from onboard the spacecraft. Next, we're talking about how 2 investors failed, leading to the test flight, but for Gradient Investment President Michael Binger, the stock still looks too risky to jump in. Quote, "This is clearly a concept stock, and its aim forecasting meaningful revenue for another 2 years out and earnings. I mean, there is 3 to 4 to 5 years out. End quote. Binger told CNBC Trading Nation. Virgin is expected to report a net loss of $1.36 a share in fiscal 2021 in December, rather than a 1.25 loss a year earlier. That should narrow to a loss of 78 cents a share in 2022, according to FactSet's estimates. Even this weekend's test flight, the candidates for recent gains may not come to pass, warns Springer. Quote, there is a lot of optimism about there, but in my opinion, the flight taking off is not a given at this point here. So I get it, space tourism is going to be a big thing down the road someday. But for me, the stock is just too speculative right now to own. So we should avoid it. End quote, Binger said. Gina Sensis, CEO of Capital Global and Chief Market Strategist at Legal Advisors, said the market's appetite has also turned against stocks like Virgin. Quote, it has its numbers where they disclosed that they were having some troubles with their flight control. Electromagnetic signal issues wrong around the time the market started really turning away from these high growth, high risk stocks into real growth at a reasonable price, and this doesn't fit that characteristic, Sanders said during the same interview. Next, we're talking about how the stock reacts after the test flight. Virgin Galactic's shares jumped in its best single day of trading so far this year, following the company's successful space flight test. The launch represents a critical step forward for the space tourism company. The test has been delayed more than 6 months after the December attempt was cut short. Virgin Galactic CEO told CNBC the space flight code was flawless and said he looked forward to the Federal Aviation Administration reviewing the flight data. The company needs to clear 2 remaining regulatory milestones before receiving a key license. However, the company still has 3 more successful test flights to go before allowing passengers to take. The weekend spaceflight test prepared represent the first of 4 remaining before it began flying commercial customers. The next spaceflight test will carry 4 passengers to test the spacecraft cabin, while the third is planned to fly by founder Sir Richard Branson, which has a market performance rating on the stock, upgrading its price target to $27 a share from $18 a share. Quote, we believe this business can have highly attractive economics if it can manage. We have reset our valuation model to our prior base case, and Branson analyst Douglas Hammond wrote in a note to clients. Hammond noted that the flight success increased the likelihood the next 3 space flight tests will be completed close to plan. Thirdly, we're talking about Cathie Wood's recent launch of a space exploration ETF, ARK Invest. Cathie Wood firm with multiple active managed exchange-traded funds will debut its latest fund, a space exploration ETF, ARKX. The firm's 8th ETF comes as an increasing number of private space companies prepare to go public later this year. In the past 6 months, 7 space companies have announced SPAC deals. ARK new fund also includes Virgin Galactic among its 39 constituent holdings. Root has gathered a large following after ARK Innovation returned nearly 150% last year. However, her flagship fund, ARK Innovation, is down nearly 9% this year, amid the recent rotation out of technology names and into value stocks from the pressure of rising interest rates. Root have stayed the course. ARK often buys the dip in any of its top holdings, which are all highly conviction names. However, Katie Woods decided to sell almost all of its holdings of Virgin Galactic. Virgin Galactic shares fell in trading as it reviewed ARK Invest Space Exploration ETF sold nearly all of its remaining stakes in the company. Katie Woods' firm sold 293,962 shares of Virgin Galactic from its fund, a day that was marked by wild trading in the stock following the company's first quarter results. Virgin Galactic shares plummeted 20% below $15 a share to begin trading, before slowly rallying throughout the day to finish just barely positive. The stock has lost about half its value since ARK began trading in last March, when the fund debuted with a stake of around 672,000 shares of Virgin Galactic, a position worth about $20 million at the time. Virgin Galactic stock then began falling after delays to its test program and commercial flight, as well as shares sales by Chairman Pierre Hapitia and then founder Richard Branson. ARK cut its RX holding of Virgin Galactic by nearly half on April 20th, after the stock slipped below $23. Shares continued to fall earlier this month after Jeff Bezos' venture, Blue Origin, announced plans to launch the first crew flight of its space tourism rocket on July 20th, a move UBS warned likely remove Virgin Galactic's first mover advantage. After Virgin Galactic reported first quarter result, putting in doubt the schedule, ARK cuts RX position down to just 7,622 shares. It is now the smallest holding in the space ETF. Furthermore, this led to more sales made by Katie Woods in the coming weeks. ARK Invest Space Exploration ETF has sold its last remaining shares of Virgin Galactic, completing its move away from one of the few publicly traded pure-play space stocks. Katie Woods' firm sold 12 shares of Virgin Galactic from its ARKX fund, the tiny remaining piece of position that was about 672,000 shares when the ETF first began trading in late March. After hitting an all-time high above $60 a share in February, the stock began falling in the wake of delays, as well as share sales by chairman and then former founder. Virgin Galactic stock have had a resurgence, however, after the company's long-delayed third spaceflight test flew successfully. The stock erased a 30% loss year-to-date and now traded back above $26 a share. Finally, we'll be talking about Virgin Galactic's sister entering the market through a SPAC. Virgin Orbit, the satellite launching spin-off of Sir Richard Branson's Virgin Galactic, is in advanced discussion to go public at around a $3 billion valuation through a SPAC led by a former Goldman Sachs partner. The company is in talks on a deal with Next Generation Acquisition 2, a person familiar with the discussion told CNBC. Next Generation 2 is a special purpose acquisition company co-led by George Mason, who previously co-led Goldman Sachs Global Industrial Group, and former Brinker-Elmer's chairman and CEO George Sami. The company is a spin-off of Branson's space tourism company Virgin Galactic. Virgin Orbit is privately held by Branson's multinational conglomerate Virgin Group, with a minority stake from Abu Dhabi's sovereign wealth fund. Virgin Orbit used a modified Boeing 747 aircraft to launch its rockets, a method known as air launch. Rather than launching rockets from the ground like competitors such as Rocket Lab, the company's aircraft carries its larger one rockets up to around 45,000 feet altitude and drop them just before they fire the engine and accelerate into space, a method the company touts as more flexible than a ground-based system. Launcher 1 is designed to carry small satellites that weigh up to 500 kilograms into space. Virgin Orbit completed its first successful launch in January and plans to conduct its second later this month. Next, we're talking about the companies being given the green light from the FAA to fly passengers to space. Virgin Galactic announced that the FAA granted the company the license it needs to fly passengers on future space flights. A key hurdle as the venture completes development tests. Quote, the commercial license that we have had in place since 2016 remains in place, but is now clear to allow us to carry commercial passengers when we are ready to do so, Virgin Galactic CEO told CNBC. This is obviously an exciting milestone and a huge compliment to the team. While the FAA previously gave Virgin Galactic a launch license to conduct spaceflight, the license expansion allows the company to fly what the regulators call spaceflight participants. The company completed a 29-animal verification and validation program for the FAA, clearing the final two FAA milestones with its most recent spaceflight test in May. The CEO noted the two last milestones were specific to the spacecraft flight control system and in-orbit navigation system. In conclusion, Virgin Galactic is trying to bring space tourism into the market. However, its lead has been eroded by multiple companies, so investors don't know if the company could continue to compete. For me, I'm on the fence if the company could ever compete. Furthermore, the move made by the founder of the company is a bit sketchy if you ask me. With that, thank you for a nice day. Goodbye.